Hey everyone, this week I'm going to tell everyone what they want to know, what real estate prices will do this year. Of course, this isn't a forecast of what I think prices will do. It's based on the new investor sentiment survey that we just conducted at the beginning of February together with Wealth Management Real Estate, formerly NREI magazine. The results are a blended average of the opinions of more than 500 commercial real estate investors, and we'll publish the full results soon. In the survey, investors were asked to consider only the property currently in their real estate portfolio and whether they expect the property values to increase, decrease, or remain the same 12 months from now, and what the percentage change will be. We included 7 different property types in the survey: apartments, hotels, industrial, office, retail, self-storage, and seniors housing real estate. The results that came back were interesting, basically landing into 3 clusters. The first cluster are what I call momentum investments. These are the property types that largely sustained momentum through the health crisis, and that includes apartments, industrial, and self-storage. These properties generally maintain low vacancy rates and high rent collections. 64% of apartment owners, 72% of industrial, and 71% of self-storage investors all expect values to rise this year. Industrial had the strongest investor outlook with an 8.2% average increase, followed by self-storage with a 6.5% expected rise in values. Apartment investors expect 5.2% price gains. I call the next cluster recovery investments. These are the property types that took a significant hit from the pandemic and lost a big portion of their income, and therefore they lost value. This includes hotels and seniors housing. 59% of seniors housing investors surveyed believe prices will rise, resulting in an average lift of 6.7% this year. And 47% of hotel investors think hotel prices will increase, generating an average lift of 4.3%. The last cluster includes office and retail properties, the 2 property types that still face the greatest uncertainty. Different subtypes of retail in different parts of the country face very different realities. They range from outdated shopping malls in areas of the country that were particularly hard hit by the pandemic to some necessity retail centers and single-tenant retail properties that were virtually unfazed by the health crisis. Only 30% of retail investors expect values to rise, resulting in a price decline of 2.8%. But I need to point out, you cannot paint the entire retail sector with a single brush. There is simply too much variance within the sector. Finally, there's the office properties, with only 27% of surveyed investors anticipating a price gain, generating an average value decline of 2.7%. Again, there's a lot of uncertainty surrounding the future of office space demand, particularly in the urban core of heavily impacted major cities. The big question is what percentage of workers will return to the office after the pandemic ends, and whether office space needs have materially changed, whether demand will shift to the suburbs and smaller cities or return to the urban core. I want to reiterate, these are the results of an investor survey and not a forecast, but they do give some interesting insights. Of course, the questions focused on expectations for just 1 year, and commercial real estate hold periods generally run much longer than that. So I encourage investors to look at the longer term drivers and keep their eyes on the horizon.